Turning to monetary policy. Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate.
Even more confidence to spend.
So we don't set mortgage rates, but when we change the federal funds rate, it will affect the mortgage rates and also all other consumer borrowing rates. Really, all interest rates that are on a floating basis will move a little bit or even a lot if they're short term, based on our moves. So the people will feel that over time. Also, it's not just these days. The market is pricing in the next 6 months what's going to happen to rates. So this is something that wasn't really the case, 50 years ago. Now markets listen to us and follow, and they make an estimation of where they think rates are going, and so they'll price things in. And so, longer term rates will move because of what the market expects, market participants expect us to do. So you'll begin to see, and you're already seeing, changes in rates long before we make the decision. It can often be already, priced in. The actual effects on inflation have been quite modest so far. It's really not. It's a small amount, but I mean, for example, I mentioned that core PCE inflation is 2.9%. Maybe 0.3 or 0.4 of that is tariffs. So it's not the big factor. It's not a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning. It's half our mandate is inflation. And I would say that the pass through to consumers has been later and less than we expected. How much of that will continue, I don't know. But the responsible thing from our standpoint was to watch and wait, because it's our job to make sure we don't make a mistake on inflation. Whenever we make decisions, we're never, ever thinking about political things. And so we're based in Washington, D.C., and many of people, in Congress, and they're often things are seen through a lens of, is it good for this party or bad for this party or this politician? We're just not looking at things that way. We're looking at what's the best thing for the people that we serve in the medium term. What's the best policy? And many people don't believe us because they think, come on, you're really political. But the truth is, most of the people who are calling us political, it's just a cheap shot. And also, we don't engage. We don't, our argument is doing our jobs. We don't get into back and forth with external people. We just do our jobs. We keep our head down and do our jobs. That's what we do.